I think that all of that Chinese EV makers that because of the Chinese president's visit in Saudi, I think these will move XPEV, Neo, and there's what was the other one? Ride or something. Those will move. Dark Q, 15 Costco 4, inside move Chewy, 13. Okay, looks great. Morning, Ankit. Which one is that dog? $42. Thought it was about 200 something at some point. Maybe I'm wrong. I think it was 200 plus at some point in time. I don't remember, but yeah. Lulu 7.5. Nice. Uh, I should have played bounce for Costco. About 500 to the upside. 466 to the downside. And for Costco, this 100 moving average on the week has been the long-term support here. Hasn't breached that yet, and even if it breaches, probably 450. Not looking for Costco to get into 380 anytime soon. To the upside, very likely 502, 500. If that clears, 513 to 515, where it started the week. URB, I don't know what that is. ABGO, that is an interesting one. Yeah, I think the iPhone upcoming, shortage of iPhones, 16 million units. I think that should have some sort of an impact on AVGO. Maybe their guide will be maybe lesser on the low end of the spectrum. 59 is the route here. 9. Let's jump into it. Futures pushing up. The futures been pushing up since the close itself. Pushed down a little bit because of the momentum on the close, but not really anything related to the technicals itself. This chart really wouldn't make sense. I was watching this 200 moving average clear, and this is where I decided to hold on to my puts that I sold yesterday. Is if it clears here, then we have still room to the upside. Probably 39.70 is what I was looking for, and it hit right here and taking a breather. Right. So exited all of my puts sold here. I could have held on to that and probably let them go worthless, but I had to get that buying power out of the trade. So what is here? Back switch. Oh, Friday, December 9. It's gonna switch the contract. Okay. So it's not gonna be much reliable. All right, cool. So this is what is happening right now, and taking a breather right about here, and we'll also check what is happening on the linear and the VIX side of things, and we'll confirm if it's a real breather. So obviously it's hitting a resistance point here. Then the next stop would be to come back down and test the major moving average, which is about 39.55. If it clears there, this chart is much better for that. The second standard deviation is holding right now. If that breaches, then very likely the 50 EMA here, 39.55, that breaches, then the 5, and then the 8. Same story, right? The conditions are oversold here, and it is hitting a major resistance point. So the same story, I'm expecting it to repeat the same story. We can either expect a bounce either from the first standard, the second standard deviation here, or the 50 EMA here, or the 5, or the 8. So the logical move to the downside would be complete if it comes back down to 8 and bounces off of it. But this chart is just for immediate trading, and this is the chart. This chart still, I was expecting it to hit right till here, 39.70, 39.72, and then take a breather. And there's a reason for why I was looking for that, because if you see Apple here, Apple still has room to the upside, and I was thinking that Apple was going to push all the way through here, 144, or at least 130, 130, 43, 60, 143.80. That was the range I was looking for to push. There is still room for Apple to push to the upside on the hourly chart, and based on that chart, I was still looking forward for ES to push higher further. And if ES clears this resistance on the 1 hour chart, then we'll move forward for our next chart right about here till the mean 39.70, 39.75 for ES. That would mean 39.70, around that for SPX. Right, now let's go into this chart. So this chart is the 1 day chart for ES, and very simple technicals coming down and all of that. Besides all of that, the reason that we were looking forward for was the mean reversion. Mean reversion happened on the day, and then after that it pushed down all the way to 39.16 yesterday. Now this chart would make much more sense. The weekly chart. On the weekly chart, mean reversion happened, right? And a couple of days back, we were looking forward for that 39.30. We hit that, and probably it was an overshoot a bit to the downside. And now today, if it starts to push to the downside, then 38.68 is the target here. Overshoot, maybe give it 5 points up and down. But if to the downside, 38.68, and the downside will come. We'll look at other factors. Why would it push to the downside? Well, the technicals are telling you if it starts to push to the downside, then next logical number is 38.60. Right. So why now? Let's see. If it starts to push to the downside, then we'll very likely see this is the chart that you want to be seeing. Again, a bounce, 39.50 area bounce. If that breaches, then the bounce is 39.40. 39.40 would be critical today. The mean on the weekly is sitting at 39.40, so that would mean about 39.30 for SPX. SPX has to hold that number again. And if it breaches there, obviously 3900 is 3905 to 3900 is the psychological level, nothing beyond that. But the next step would be push all the way down here into 3866. Although this is not what I would want to see, but that's the technicals. What I would want to see is a push up again here. This is the daily chart. So the technicals are satisfied here till 39.20 or whatever. So we want to see it push all the way to 5. That's what we want to see. 39.75 for ES is what we want to see, and that will come if the ES can breach above the 21 on the day. If ES breaches above 21, and I'm hopeful that it will breach the 21 on the day, and the reason for that is Apple is pushing, and I still see Apple at least $1 more, and if Apple pushes at least $1 more, then it will clear up this 21 where it is acting as resistance right now on multiple time frames, 39.65 area. That clears, I'm still expecting it to hit the 5 at around 39.75. That would mean 39.70 around that area for SPX. If that clears, it's going to push all the way into 39.80, 39.85. That would obviously mean about 39.75 to 39.80 on SPX. The mean for ES is sitting all the way at 39.94. Uh, Maybe if it overshoots the 4,000, right? So 39.94, 39.95 to 4,000 is the a top for me. And this bounce was a technical bounce still. And then if it starts to push down either from this 21 or from the 5 or from the 8, I think we still have to come back down here all the way into right here till 39.50. Test this, and this is ES by the way. So deduct about 8 points from ES, you'll get the SPX number. And then if it pushes down from this 39.50 area, 39.49, 39.50, it's going to test 39.38. That means it will come back down to 39.30 again on SPX. That breaches, we want to watch 39.17. It was 39.20 around here. Now it's 39.17. We want to watch that. We want to see ES hold there. We want to see that SPX hold around 39.10 area. If that breaches, it's going to push down all the way here. 39.05, that would mean about 3900 on SPX. So not really plotting anything below 3905 for ES. Well, very likely it's going to be around bouncing here. And if it breaches there, then 3960, 3965 is where I would probably stop for 3960, 3965 is where I would stop for ES. That would mean probably about 3855, that area for SPX. Today, I am not really looking forward for that push to the downside. I would assume that market is going to push either into the 5, into the 8, and stop somewhere between the 21 to probably 39.40. Within this range, right about here, within this range, moving average to the downside. And if it clears the 21 moving average to the upside, then 5 weekly, 5 daily, 8 daily. Within this range, I think the market will try to be try to stabilize here. Not really expecting a big move, perhaps. We'll reassess. If it breaches the 100 moving average to the downside, we'll reassess the situation. And if it breaches the 21 moving average to the upside, we will reassess the situation again. Right. Let's get into VIX here. VIX, right here, VIX has been trying to get up to this number again and again and again, and it's failing there. And if it clears this 100 moving average, 200 moving average resistance on the weekly, I would start to take VIX seriously and push all the way up into 24. And if that clears, very likely it's going to push all the way into 25.50. We are not there yet. We are definitely not there yet, but it is building. The momentum is building for VIX. And look at the VIX on the daily chart. The MACD has crossed to the upside on the daily. So if it clears right now, it is pinned below the 21. I'm thinking it will clear at some point and start to push to the upside, 23.95 to 24, and very likely push all the way into 25.30. And we'll see what happens after VIX clears this resistance about, let's say, 23 to about 23 to 23.20 range. We'll see what happens if VIX after VIX clears this resistance. Again, it will get smacked down to the and then pinned below this 200 moving average, or will it clear this and push all the way into the 8? So if VIX takes this path to the upside, which it has to at some point in time, if it does take the path to the upside, then very likely we'll have sell-off in the market. But if VIX is pinned below this 200 moving average, which it has been so far, then I think market will still be stable here. And a couple of factors why it will be stable. Look at where is that oil? Look at oil, and we've been watching oil all the way right till here, right? We've been watching this chart for almost every day, and even when oil was spiking, we were saying that it's going to be an ephemeral bounce, and this is the number we've been watching for oil to come back down, and it came right back down within this range, within the 200 moving average and the 50 EMA on the month, and it bounced here. And of course, it bounced, and there was a catalyst for the bounce. Keystone Pipeline, there's an outage there. There's a leak there, but nonetheless, it did find support here and bounce. Now there is still more room to the downside. Why? Because right here, the MACD is still crossed to the downside. Right, so maybe it will stall around here, but if it breaches this 50 EMA, The downside about 71 of, let's say, what is this number? About 71. Let's round it up at 71. And if it starts to push to the downside and it breaches, this number 72.50 and pushes down into 71 and breaches 71, then we're going to push all the way into 63. And should oil take this path, which most likely it will take this path, and then you will have the markets, it will spook the markets. Why is oil pushing down? And what's happening with the global demand? Global demand, is it cooling off? Whether there's going to be enough business? That kind of questions will start to arise. And if this oil starts to push lower, and then breaches below this 200 moving average and the 50 EMA on the month, this is going to signal pretty bad stuff. And we are still waiting for this 8 below 21. Right now, 8 is above 21. That is still okay, but if 8 turns below 21, then we'll see continued downward trend for oil, perhaps into 64. Yeah, this will spook the markets. So be on a lookout for this. Okay. Uh, and the oil story doesn't end there. This is a technical bounce. We got that right till technical resistance 75.40 or somewhere around there. It hit that 5 on the daily and starting to take a breather from there. And if it comes back up again to the 5, and then we'll probably test the 8. We would want to see oil stabilize here, right? At least into this week and into next week. We would want to see oil stabilize, very likely for a stable trade for this week and the next week. We don't want to see it, move the way it is moving. So yeah, let's see how this plays out. Right. Let's get into US 10. My understanding is that US 10 will still move to the downside. Perhaps we want to see 3.35. Right now it is bouncing. 3.42, it is bouncing, and we still have MACD on our side to the downside. We still want to see this curl to the keep curling to the downside. Last time it tried that after 3-4 days of red, it kind of gave up. But this time I would want to see it come back down. We still have the full cycle to complete here on stochastic. We still have this thing to go down further. So I'm still thinking that whatever this bounces, it could be an ephemeral bounce, and perhaps might last all the way into the 21 on the week, 3.51 or something. We'll reassess the situation if it clears this 3.51, 3.52 area. If it does clear there, then we're looking for a bounce all the way up to the 5, 3.66. Although I would think that it's going to take a breather from about 3.52, 3.51 area and start to push to the downside. If it does go the way that I'm thinking, that will test this 21 on the week and start to come back down. If it happens that way, then this push down, current push down is ephemeral, and then we'll see it come back all the way down into 3.32, and the market should move to the upside. So there are a lot of moving parts right now, and next week there's a CPI, FOMC, and all that is going on. So there's no clear theme as to which way you want to be betting. You want to be watching the hourly chart and trading the hourly chart, right? So that's the only way that you want to be trading. There's no clear path forward. There are a lot of moving parts right now. So yeah, watch for that oil, watch for that 10-year, and also let's get into the. Let's really quickly get here, 10-year. So 10-year bouncing, very likely it will test this number about 3.50. I would say that this should be an ephemeral bounce. But if it clears the 5 on the daily, then we'll look for the 8 on the daily, just like this spike here. And the trend has been it has been pinned well below the 5 and 8 on the daily. So I'm expecting that trend to continue. Not really expecting it to breach above the 8. But if it does breach above the 8, then very likely it's going to stay probably around here, 3.62, and push down. But for now, I'm not looking for a further push up from the 5, 3.50, 3.51. Not really looking forward for anything pushing above this 5 on the daily. So this is what I'll be watching. And if it clears a 5, then I'll be watching for a hit of 8 and then push lower from 8. Cool. Let's get into DXY. DXY is still struggling because the 10-year is struggling. And I don't believe that this is the peak for DXY. Obviously, we'll see what happens with the FOMC, the FOMC, the CPI print. Everybody around, all the technicians, all the analysts are saying that the CPI print will be softer. They are right now, the Wells Fargo, they said it's going to be about 3.8. So I think they're expecting a softer CPI. So that would means probably a bounce in the markets. And after the softer CPI, expecting the Fed to be kind of saying that the slower pace of hikes are here, probably 50 bips at December, and then 25 bips in February, and 25 bips in March. I think that's the way it's going to go, and probably around May, I think they're going to do another 25 and stop in May and pause throughout 2023, and probably start to lower or probably cut the interest rates about 2024 Q1. So let's see. That's a projected path, and if anything changes in that projected path, then I think the markets will kind of not like it. Three if expectation is for 325 bips hike next year, but if Fed does anything beyond that, then I think it will be over tightening. I think right now, even right now, I think it should be at 25 bips in December. I think right now Fed is starting to over tighten, and I think it'll start to see something break in the emerging markets. So watching that trade carefully. And also the other thing is the biggest thing on my mind right now is none of this, but China. China is reopening, and that is again a thematic play that you want to be always watching. China is reopening, so which way is it going to go? China will they see a clear sort of reopening, or is it going to be the cases going to spike, or deaths going to spike, and is the China going to go back into the lockdowns? How will that happen? If China reopening happens smooth, then very likely whatever happens tomorrow will very likely, rather, whatever happens next week will very likely be continued into the next year. But if China does, something happens in China and China goes back into lockdown, and then you will see a lot of turmoil coming out of China, right? The people are not going to take it very easily if China goes back into lockdowns again. Civil unrest is the major problem that is on my mind right now. If something goes wrong with China, that's a single biggest thing that's a single biggest risk to the markets right now. China reopening goes bumpy. And if that bumpy is still okay, but if something goes wrong, that COVID resurgence and lockdowns and all that stuff, it's going to be another supply shock, and world is not ready for that. And very likely we'll see an immediate drawdown of at least 20% in the markets, or better than 20% if the next supply shock comes in. Yeah, I'm not expecting that to happen, but if it does happen, civil unrest and shit like that goes down in China, then yeah, next year will be very, very, very ugly. Probably the ugliest in recent times. Yeah, probably what we'll see an immediate drawdown of, I don't know, 20-25% on SPX. Why? Because China, something happens in China, and Apple goes down, and Apple brings down everything else. And very likely, Apple is. I think that's one of the major reasons that Apple is looking to get their supply chain or manufacturing out of China and move elsewhere. I think that's one of the major reasons that Apple is doing that. So watch out for that. There are signs of that happening. We saw that last week happening, but that is the single major risk on my mind right now. And I am whatever trade I'm taking, I am hedging that trade, not leaving, especially on the long side of things. Short, we understand how to play the short, especially on the longer side of things. I am always hedged. I am always hedged on the longer side of things. Right. So that being said, let's come back to DXY. DXY, I think it's pinned below again. The same thing, just like is the market open? Not yet. Uh, DXY will go through this along as the day passes, but 5 and 8 right now that's the theme. I'll not take DXY seriously until it clears 200 moving average on the day. If it does clear there, then I'll start to take DXY seriously. Let's get into Apple here. Apple to the downside, we still see, where is that? Right. We still see this as 138.80, 138.50 area. We still see that as I still see that as a support area for Apple. But if Apple starts to move up, very likely 142.80. This is what I was expecting Apple to do, 142.80, and perhaps take a breather from there. And then if it clears there, very likely it's going to test the 5, 144, and take another breather there. And absolutely, Apple should stop right about here. It starts to push up 145.30. Not plotting Apple beyond the mean on the daily as of now. If it clears there, if it pushes up from there, we'll reassess the situation. As of now, I don't see that happening. But if it does clear the 5 on the day, then we'll see it push all the way up into the mean. But let's reassess the situation right about here, 142.90, 142.80 area. If that clears, I'm expecting it to hit 144.10, 144.12. Right, to the downside, 138.70, 138.50, that range still remains the support. Let's get into Apple on the on the hourly. This is the chart. I'm still expecting this to kind of move up and push all the way into probably 143.80, 143.90 range, and probably take a breather there. On the 4-hour chart, we still have room to the upside, very likely 144, but the lower time frame charts are getting overbought and getting pushed down. So this is what is happening with Apple, and that's the reason we see ES pushing lower. My expectation, at least, was for it to hit this 142.80 and then take a breather. It's not happening. It did not happen. So it is what it is. If it reaches here, the 1-hour chart, if it comes back down, I expect it to hit 141.80 and probably 141.70, 141.80 area bounce again. If that breaches to the downside, then we'll push into 140.88. And let's get into Tesla. Right, Tesla, the bottom, I still think it needs to push down all the way here into 163, 163 to 158 area. And if it breaches the 200 moving average around 163 on the week, then very likely it's going to push all the way down here into 157, 158, the 50 MA on the week, on the month. Very likely we're going to see either bounce around 163 to 168 area, but if it doesn't bounce here and if it starts to push to the downside, and it will bounce here, and after the bounce, it will come back down and it will breach this number at some point in time. Perhaps if the CPI comes in hotter than expected, it will likely breach this number to the downside, and very likely it will push all the way into 130, somewhere about here. Why? Because we still have the MACD cross to the downside. But this is a different chart. This is the monthly chart. I think the weekly chart is getting oversold here, so I'm expecting a bounce on the weekly basis right about here. Looking at Tesla on the day, yeah, first bounce, again the same thing, 168. Yesterday it was right here around 169. That has pushed down a bit around 167, 168 area. First bounce, then if it breaches down there, very likely it's going to come back down into about right about here, 164, 163 area, and looking for a bounce around here again. Bounce could last very well, if it goes Microsoft bounce like this. Where is the Microsoft? Right here. If it conditions are similar, right? Oversold conditions, looking for a major bounce point from a major moving average. So Microsoft bounce about what, 40 points. So I don't know Tesla how much bounce it has got, but very likely you can see if it bounces here, then very likely it's going to hit the 5. If the 5 clears, then the 8 about 199. So 187 to 199 is the area that I will be looking for a bounce. Let's quickly look at the last chart for the day. Yeah, this is getting oversold, but not as oversold as this one right here, but still getting oversold. If it crosses to the upside, the 5 is sitting about 172, the 8 is about 172.50. and the mean is about 175. All right, 3 minutes to the open. Let's get into live trading.